Welcome back. As promised, let's get chatting with the management of Ethos Watches. Remember, this is a company that runs a luxury brand, luxury watch store. They have around 17 odd stores, and they have a target of they have 50 stores in 17 cities, and they have a target of adding around 13 stores in the next 3 years as well. We have with us Yashovardhan Saboo, who's the founder and chairman of the company. Thanks a lot, Mr. Saboo, for joining in. Could you tell us, the second quarter is seasonally weak for you guys, but how has that been as compared to the first one? And now, importantly, the third quarter, that is extremely strong. What have the initial footfall trends been like?
Thanks, a pleasure to be here. Actually, the second quarter, which is usually equal or a little bit weaker than the first quarter, has actually been pretty good and pretty similar to the first quarter. So we are very happy with the second quarter results and what we're going to be showing soon as the half-year results. And going into the third quarter, obviously the third quarter is the most important quarter for most of retail, and it's no different from us. It's called the festive period, but for us, this is the quarter that really is the best because it coincides with the wedding season. And of course, watches are a very, very important and increasingly popular gift at the time of weddings. So we are anticipating a great quarter. At the end of the Shraddh period, we are already seeing an uptick in sales, and this gradually grows until Diwali and even more after Diwali. So we are ready for a super quarter.
Okay, all right. Hi, Mr. Saboo. It's been a while since we spoke. Nigel on this side, you're sounding reasonably optimistic, and quarter three, as you said, should be a blockbuster. Deep pockets, I would say. People coming out there and buying those expensive watches. But be that as it may, give us a sense on business. I think online sales accounted for close to around a third of your sales, as per what we have last. What is the mix right now, if you could tell us? And also, what is the margin difference between online and offline?
So online, so I would like to start by saying that we don't make a very big difference between online and offline. So our model is really omni-channel, and that is because the customers are now seamlessly spread across both the channels. Very often, the journey of starting to buy a watch, the research starts on online, then they visit the store, they physically see the store watches, they evaluate, they think about it, research more online, and finally close the deal at the store or even at their home. So it's not really a big difference, but what we call online is leads that start or sales that are made from leads that start online. Typically, this has been between 33 to 35%. That's where it is right now. During the COVID period, of course, it jumped up to as high as 40%, but it's at about 33 to 35%. There is no margin difference between the two because our terms are exactly the same, whether someone comes, starts the journey online or wherever the sale is consummated. The terms are exactly the same. So there's no margin difference.
Right, we take that point. You said, the demand in the second quarter has been better than anticipated, which was otherwise a seasonally weak quarter for you. You are anticipating an extremely strong third quarter as trends from post-Shraddh indicated. So what does that mean for an overall year revenue perspective for you? Because, at the start of the year, you had a target of 25% growth, then you upped it to 30 to 35 odd %. Is there a chance that, given this optimism, you may outdo that as well?
Well, we're still looking at the same. We're still looking at the same. That's because, it's not a question of a quarter by quarter kind of divergence. I think what our estimate of what we would be growing this year was based very much on a strong undercurrent of demand that we have been seeing developing over the last 2 or 3 years, starting from the pre-COVID period. And we could see glimpses of that in the quarters that were not impacted by COVID, even during the last 2 years. So we are really basing our projections and estimates based on that. We still believe we will be growing by about 30 to 35% over the last year. I think those are nice numbers. Of course, we are looking at the global economy, but I think India is strong. The market is very strong, and we are pretty confident of getting those numbers.
Okay, all right. And give us a sense about your store, number of stores that you've opened, say at the halfway mark. And for the year, what kind of a store opening number are you looking at?
Well, a lot of our store openings actually depend on the malls where they're housed to be ready. Some of them are delayed. We hope to open 8 or 9 stores in this financial year. Many of them are just around the corner. We're starting the fit outs, but most of them will actually come into operation in the last quarter of this year. So they've been delayed because some mall openings have been delayed. Overall, I think we've upped our expansion plan over the next 3 years to expand by about 35 stores. This includes stores in several new cities, 9 or 10 new cities, and also increasing our presence in some of the metros and smaller metro cities.
Okay, all right. So you're saying that 8 to 9 for the year, for the next 3 years, 30 to 35 is what you're talking about. Till today, how many have you all opened? New stores in FY23 so far, and also give us a sense on the average selling price. I think it was at around 1.6 lakh odd.
It's about 1.6 lakhs right now. Since May, we haven't opened any store this year, but we hope to open some, as I said, we hope to open 8 or 9 during the last quarter of the year. The mall, there is an additional store in Bangalore. There are 3 stores in Ahmedabad and 2 stores in Indore. This is something that I can immediately think of. Yes, and Surat, Raipur, these are all on the cards too.
All right, take that point. Just a couple of questions on your other relatively smaller but fast-growing businesses. The pre-owned, you had a target of almost, 75 crores in terms of revenues this year, crossing that 120 crore for the next year mark. What does that number stand at right now? Do you think you can better that this year? And secondly, on your... Go ahead.
So it looks to be on track. I think we are looking at the same numbers, 75 and 120. It is a fast-growing segment. A very great response from the market. However, we have to be very cautious in how we grow because selling pre-owned watches with credibility means certifying the watches and making sure that the refurbishment is superb. And this depends on the skills of qualified watchmakers, which we are constantly upgrading. So, yeah, we hope to be able to achieve those numbers.
What is your updated market share, Mr. Saboo, before we let you go?
Sorry, can you say that again?
Updated market share.
Market share, we're not really able to sort of look at it on a monthly basis because estimates of the overall market size actually come in only a bit late. I think we are increasing our market share in the luxury segment. It was 20%. I believe over the next couple of years, it will go to 25% or more, and we are on that track.
And how many exclusive brands have you added this year? What's remaining for this year?
We have been in discussion with several brands. I think we've added 2 brands. And I hope that before the end of the year, we will be able to share the names of at least 2 or 3 other brands that we will add to our portfolio very soon.
All right, take that point. Thanks a lot, Mr. Saboo, for joining in and giving us the outlook. Reasonably optimistic for the second half of this year and this year itself, even though they believe that they will, meet that 35% sort of guidance coming by. The street likes that optimism. The stock at the high point of trade. We take a short break, come back, we get you more on the markets and individual stocks.